We're letting everyone in, huh?
Yep, looking good so far.
Come on. Come on. You know how we do these things now. Tell us where you're from. Tell us where you're listening from, right? Shout out your state, your company, wherever you're at. I'll start it.
All right, welcome everyone. We're ready to get started on our webinar. I'm Melissa Smith, the Managing Editor of Content Solutions here at HousingWire. And our topic today is strategies lenders should adopt from direct to consumer lending, sponsored by Insellerate. A few housekeeping items. We'll have a Q&A session toward the end of the webinar, and you could submit questions anytime by clicking the Q&A icon on your screen. Also, HousingWire will be sending a webinar recording to all registrants in the next 24 hours. Now I'll hand it off to our moderator for today. Take it away, Alex.
Awesome. Thank you so much. Well, welcome everyone. I know I can still see everyone is piling in, so keep piling in. You know how we like to do these things. We're super interactive when we have these presentations. So join in, share some comments, some chats. You see somebody on there that you know in chat, say hi to them too. A quick shout out to our panel here, right? I'm going to start actually all the way on the right with Corey Shelton from Atlantic Coast. Corey, I'm starting with you because you got a drink in your hand. Cheers, brother.
Cheers. I got a Boomerang glass in my hand too.
And you guys got to stick around and hear what Atlantic Coast is up to. So just make sure you stick around through the end because the big questions come up at the end. And then, of course, he needs no introduction, but he will get one from us anyway. Mr. Josh Friend from Insellerate. Josh, great to see you.
Good to see you as well. Thanks, Corey, for being on as well.
Yeah, thanks for having me.
Awesome. Well, why don't we kick things off here? And everyone that comes in a little later is just going to have to play catch up. So, as we said, it's going to be very exciting. We're going to talk about what can retail lenders learn from consumer direct. I want to show you guys something very special. And this is just a teaser to what's coming. So Atlantic Coast, in the previous 7 days, okay, we're talking about now, we're talking about in the moment, okay, received 535 life events on their database for a potential volume of $210 million. We're going to dissect that. We're going to dive into what they're doing with it. We're going to dive into how they're making this work, how they're partnering with Insellerate, what they're doing internally, and how Sales Boomerang is playing a role with all of this as well. So that is what you guys can expect. And what I want to do is hand this off to Josh because Josh is going to walk us through a little bit of what retail is going through.
Yeah, thank you, Alex.
Sure.
I mean, retail has been going through a transition through the last handful of years where consumers are kind of not as face-to-face, but I think we can see over the last 12 months, just take a look around. COVID has done, sped that up. I mean, drastically. Look this in office space. I look at my office. I'm the only person that comes in the office. Occasionally someone will come in here. We're going to move to basically, I've told everyone you can work from home or you can work in the office. I don't care. You guys are doing everyone's doing the job. We don't ever have to be in office ever again if you don't want to. I think that those things aren't changing. Right, consumer behavior is not changing. Things have sped up. Last night, my daughter was practicing water polo, and I'm ordering her food because it's like 7:30 at night, and she wants to eat Chick-fil-A after water polo. That's her favorite thing to do. And I'm realizing, it's cold. I want to get home. I'm hungry. I actually ordered Chick-fil-A like on my phone. I've never done that before. I've never ordered fast food on my phone. I mean, maybe people have been doing that for years or for more than a year, but I never have. I ordered on my phone and it actually knew when I was pulling in the parking lot. So it said, all right, you're in the parking lot, food's being made now, put your, hazards on and we'll bring it out to your car. That's an experience I've never had before, right? Those things aren't changing. So what we're really seeing is, in the retail lending space, this convergence of consumer direct tactics and retail lending. Yeah. I think, Alex, the next slide is a good one to go to.
Perfect.
And that's only going to speed up right now. If we take a look at what the MBA forecast is, purchase volume is going to grow, right? There's a huge appetite out there. There's a lot of millennials that are ready to buy homes. There's people that are wanting to move out. There's massive demand out there. There's the biggest holdback for housing is going to be a housing shortage that we actually have right now. That's something that's really slowing down by how many homes would be being sold. So we have this uptick. And then we have the consumers who have been staying home, who are used to doing transactions now, not face-to-face. And if you take a look at a retail lender, a retail loan officer, that first transaction, you may meet the person, You might not even meet the person. You may do business with them virtually from then and on, right, Corey? I mean, not everyone sits down face to face. You're going to get a referral. It's going to be a phone call. It's going to be an email. People are already on that not face to face. So these tactics, the things that people have to use to employ to keep people engaged, build customers for life, do something of value, that's going to become very, 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 very important. We take a look at, really, this is where retail lending, no one is fully here yet, not 100%. There's people that are here 90%, 80%, but let me just take a look at like the kind of the big picture. We are going to be able to start providing mortgages online, and a consumer is going to be able to get everything done in 3 minutes, not just get like an upfront disclosure. I mean, get their loan docs, right? You're going to get income verification. We already have that. Asset verifications, an appraisal waiver. 60-70% of all the Fannie Mae, Freddie Mac loans I talk to our customers, they're all getting appraisal waivers on them. That's only going up. Homeowners insurance, people are working that right now, being able to pull down homeowners insurance. Title's already been automated in most states digitally. So you look at the major things that you have to interact with, that's changing. So if you're a consumer and I'm out there shopping for your house, my real estate agent may have said, come work with Corey. Corey's a great person. But I'm looking for homes. I'm on the Zillow app. I'm on Redfin. And the whole time, what do I see? There's ads. Get a loan. Get a loan. Get a loan. Why did Zillow buy a mortgage company? Why did they buy a consumer direct call center that did nothing but retail loans? Because they understand the transaction where the consumers are. So we have to evolve and not look at these silos of it's consumer direct, it's retail. We have to blend, right? We have to adapt technologies, which I'm super excited to have Corey on here because, I know Atlantic Coast Mortgage well, and they're doing this now. They're kind of innovating some of these areas. So it's important right now that where we have to go.
Yes. Yeah. And look, it has, you said it's changing, but I think it's changed. And I think Corey can shine some light on that and talk about some of that now.
Yeah, definitely. So as I was kind of thinking about this presentation, the difference between retail and direct to consumer and what we can learn from direct to consumer, I think that while the intent of both are the same, right, which is hopefully to help individuals and families accomplish their home buying goals, that said, there are some differences between retail and direct to consumer when it comes to, the strategies, tactics, and execution. There's also a lot of crossover when it comes to that. But in my opinion, the biggest difference is the mindset between both. So what I mean by that is retail is driven by the sales team and the personal relationships that the loan officers build and grow. So the mindset here is growth. So most are just trying to grow their referral relationships and customer advocacy, and some focus, more intentional efforts around customer retention and repeat business. But on the flip side of that, direct to consumer is driven by digital first. So the mindset here is scale. And there's a big difference between a growth mindset and a scale mindset. And from the direct to consumer side of things, when we're talking about scale, they're trying to connect and engage with potential customers through online and social efforts that reach the masses, right? And there's a much stronger and more intentional effort around customer retention. So whenever I'm talking to somebody about, the difference between growth and scale, because they kind of are used interchangeably, the way that I break it down is like this. If we're talking about growth, is if I'm a loan officer and I can help 20 people, I bring on a LOA, and now I can help maybe 10 more people. Whereas with scale, you're leveraging intelligent automation and different technologies and tools like Sales Boomerang and Insellerate, so that one person can reach many people at one time, and you're able to hyper personalize and tailor your communications with them. So Alex, if we want to go to the next slide. Sure. So the big question here is, what should retail take away and learn from direct to consumer? And from my perspective, it's speed, efficiency, scale, intelligent automation, and personalization. So really what all this boils down to is perspective. I think that, another key part of that is a sense of curiosity and a desire to continually grow, improve, and most importantly, evolve. One of the things that I see a lot of times on the retail side is, and we can dive into this in the next one, is where a lot of times the the retail loan officer, their ability to change and adapt with the market is much more difficult than the direct to consumer side. And what I mean by that is on the direct to consumer side, it's being driven that top of the sales funnel process, or I should say, this is more of a challenge in retail because you have loan officers that are stuck in their ways. That's probably a better way of saying it versus direct to consumer, which handles the top of the funnel process and can therefore adjust, adapt, and evolve at a quicker pace, simpler than what, you know, the retail side can. So on the retail side, you can make some broader sweeping changes, but each loan officer has their own way of doing things, which can hinder their own ability to grow. You know, anybody who's in the retail space, particularly on the marketing side, I'm sure can attest to this, where it's, you know, you lay out a set of processes, a set of tools, and then you provide them to everybody. You provide the training and the support, but people don't necessarily want to adapt to that.
Let us know if you guys agree with that. If you're listening and you heard Corey just say that, is that true? Are you seeing that in your organization? Thumbs up, smile, yes. Just let us know that this is resonating with you, right? We want to make sure that what Corey's about to share is, if you're feeling this, he's about to show you what they've done, and it's pretty remarkable, right? It's something that Atlantic Coast, the strategy that Atlantic Coast brings to everything they do. This is just a tidbit of it, and it's just brilliant. So if it makes sense, if it resonates, just tell us. That way we can really hone in on things and ask questions if things Corey has said has already inspired some curiosity. So sorry, Corey, I just wanted to see if people agreed with that.
Yep, no, that's great. And by no means, I'm trying to be careful with my words, because by no means am I trying to disparage loan officers on the retail side, right? It's not about that at all. But what I've found, at least in my experience, and you know, some of the challenges that we've worked to overcome, is that on the retail side, loan officers either don't want to, or it's more difficult for them to change and adapt and evolve, right? Because they have a way of doing things. That's the way they've always done things. On the direct to consumer side, it's much easier when you have a team that, at least at the top of the sales funnel process, is kind of mandating, you know, whether you're talking about digital ads, or the CRM follow-up, all of those different pieces, or the other technology that's incorporated in there, they're able to kind of dictate that at the top of the funnel process. And then they're handing off those leads to the loan officers. So one of the things that I found is, you know, loan officers, like I said, they don't want to adapt or adopt new technology. One of the biggest things that I found as a pain point, you know, as a good example, is video. And, you know, when we've tried to push loan officers, even when we've given them sort of scripts and templates that they can use, a lot of times what it seems to kind of circle back to is that it's rooted in fear of failure, looking silly, or they just don't think that they need to do the thing, right? Whether it's video or creating more personalized communications that they can send out to scale. So they don't want to invest the time needed to learn and leverage those tools that they need, even though they have access to them. So to me, those are really the more or less kind of the crux of it. The biggest difference is it's really the mindset, I think, around that. Because if on the retail side, the loan officers took the same approach as what the direct to consumer did, and if the place or the mortgage company that you're working at provides you with the tools like Insellerate, like Sales Boomerang, along with a number of others like Mortgage Coach and Social Survey, and a bunch of other different great tools that you're able to leverage and use. What I find is it's the barrier to entry is I just don't know how to do it, or I don't want to adapt and evolve. And that's where I think that on the direct to consumer side, the retail side can pull a lot of those lessons learned of being willing and open to adopting new technology, adapting to change, particularly as what you pointed out, Josh, where now more than ever, people are meeting less and less in person and more online. And so people are becoming more accustomed to the digital processes that we have to offer. So to not be online, to not be leveraging these tools, you're really doing yourself a disservice in your ability to continually grow, or better yet, scale your business, and your production pipeline is going to significantly decrease, particularly as I think direct to consumer continues to get better at creating more personalized engagements and creating better experiences overall. So that's kind of my what I have to offer. That's more or less the gist of what I think that direct to consumer, or that retail, I should say, can kind of pull away from the direct to consumer side.
So listen, and this is interesting. We're about to go on to another slide here, and I'll go there, but let's talk about this for a second, because I think, and again, you guys can comment and thumbs up or whatever you want to say. I believe so you're mentioning a problem, but what's the solution? Like, how do you get somebody to learn new tricks, or how do you get somebody to adopt something? Where's the turning point? What do they need to hear? What's the message? Or are you saying, hey, let's recruit consumer direct people into our retail division? What's the answer? I don't know if we're going to get to that later on or not, but I believe that might be a question on people's minds. Like, yeah, I have a retail team that doesn't want to adopt. How do I get them to believe in this? And if you have an answer for that, Corey, maybe as we go through this, you can kind of give us your thoughts there. Is that fair?
Yep, I definitely have a couple of tips to share. I'll save it for a little bit later, though.
Yeah, let's get through a couple of things here, but I think that's a question that people are going to want to answer, right? Because yeah, that's a problem. We all know that people don't want to adopt new things. Well, Corey, how'd you do it? Because you guys are doing it, right? Like you guys are having success, and you are generous enough, I'll say that, to get out here and on a public platform and say, look, here's how we do it. And we're sharing this because we believe every customer should have a great experience. And the customer starts with your loan officer. That's your first customer, right? And so how do you get them? So it's beautiful, Corey. Thank you for everything. And look, let me just share. And this is part of, you can jump into this too, everyone, Josh and Corey. So, what we've discovered, what we found through research, and this is a statistic you guys may have already seen, is that there's 11 mortgage-related transactions in a consumer's life. Okay. And what Josh is talking about, what Corey's talking about, is everyone, not just consumer direct, but everyone needs to be there needs to have access to this kind of information at their fingertips with ease. It's got to be effortless. It's just got to be there, right? If you ever seen a surgeon in an operating room, he doesn't look away from what he's working on. He calls for things and things appear, right? Because he has to focus. Your team has to focus, and these things need to appear. Right? They need to appear in front of them, need to appear in front of your borrowers as well. So 11 mortgage-related transactions. As you guys know, if you've heard us talk before, our job is to help you get all 11, right? You know that, Corey, we provide these opportunities right back to you, so you guys have action to take on all 11 opportunities that can come up. And Josh's system makes sure that it gets there with ease, right? So how do you become relevant, right? When we're talking about 11 transactions, you can't hope that somebody comes to you for all of those transactions. You have to be relevant. You have to make yourself relevant to them, and they have to be relevant and have an aligned interest in what you're going to talk to them about. If you have to check the box of doing more cash outs or more purchase just to check the box, but you call your customer and try to sell them a home or try to push them into a program that is not particularly for them, you're going to feel resistance. And the minute you feel resistance, you go into this hyper sales mode. And that's not the point here. With the right technology, with the right intelligence, with the right automations, you can actually be the advisor, right? So you have Sales Boomerang on one hand, that's got the intelligence, that's timely, that's automated, that's particularly designed to focus on a one person, but customize the message for them, right? What are they going through right now that you can help them as a lender? And then Insellerate, with its technology, takes that information and uses its automation and intelligence inside their own system to deliver messages through the right channels at the right time, watching for open rates and click-through rates and responses. And he's getting you in social. And sorry, Josh, I'm pitching your stuff for you. And he's getting you in voice, right? So not only are we delivering the right message, but then Insellerate is sharing it with the customer in the right channel at the right time, right? So now you are relevant. You're no longer just calling to fish for information. You're actually delivering the guidance, right? The advisory that you've been claiming for so many years. You can own it now. I'm calling you because blank, blank, blank. We're not pulling your credit. We just want to know if this resonates. It resonates? Great. We're still not pulling your credit. Why does it resonate? Oh, because you're going to save me $300 a month and I need money. Why do you need money? I need to send my kid to college. Now I know why you want to refinance, right? Okay. You can't ask those questions if you're scared. If you're scared that the customer is going to say no, you can't ask those questions. But with this kind of information and the automation that's happening behind it, you could just be a good listener, right? You could start there. And so here's a couple of things about the results you get when you have an automated borrower intelligence system, right? The top section is where we're seeing retention rates climb when you have an automated borrower retention system, and it's powered with automation, right? You're seeing 24x ROI is on average what our clients are seeing. Lift in volume, you see that cost per acquisition. You guys know the average cost per acquisition is $1,500 or so. Josh probably knows even better than I do. That's around where it is, right? $1,500.
Yep.
Our clients get to see around $300 cost of acquisition when you're running this program. And what does this mean? This right here is very important to understand. Okay. And then we're going to move right on. Your database. Okay. I want everyone to step back a minute because this is going to, if you're not sitting, sit down. Your database can produce upwards of 13.5% opportunities per month when you're running all of this intelligence on it, where you're looking for mortgage inquiries and credit improvement and equity notifications and listings and early payoff notifications and cash out alerts, right? Or rate and term opportunities. When you have all of these running, that means that over 160% of your database will have an activity every single year, right? That means people are having more than one a year. And that's why this is important. You saw the statistic, right? You saw the statistic. I think it's one below here. You saw this. And Josh, I'm coming right up to you in just a second. You saw this 535 life events in 7 days for $210 million in potential volume, right? That's just 7 days. And so you can understand, right, the importance. And so, Josh, let's tie it all together.
Yeah, I think, thanks, Alex. I want to go back to what Corey said. I think what you said was really, really good to think about retail and consumer direct. You said scale. And really that's what it comes down to, right? Is being able to do things at scale and being able to make decisions quickly and being hyper efficient. The market's just shown that, I was thinking, Amazon, are they a retail lend? What are they now? Online? Are they brick and mortar? Because they sure seem like they're brick and mortar now. They own Whole Foods.
The answer is yes.
They're both, right? They're not. It's not one or the other. It's they're Amazon.
Yes.
Lending is going the same way. So scale is what you have to be able to do. And in order to really run scale, you have to have the engine behind it to run the scale. Right. That's where we come in. We have two products that we sell. It's our CRM lead management system, and something to really think about. And I think this is where retail lenders really need to pay attention is your contact strategy, how you manage leads when your customer inquires online is utterly important. There's study after study that shows, MIT did a study that if you called someone who inquired online in the first 5 minutes versus 30 minutes, you're 100 times less likely to get a hold of them at 30 minutes versus 5 minutes. So being able to manage from an inquiry, whether they call you or text you, and being able to respond to them is very important. We have done a study 3 years in a row, about 1,000 lenders each year. We will go online, apply for a mortgage, ask them to give us a call, whatever method they have. Over 50% of the time, the lender does not respond to us, not even one time. So you have to have these engines. You have consumers coming back to you. And Alex, 66% retention rate, that's amazing because the marketplace is 19%. Right? I mean, that's, you really think about it. The bar is very low to do this well. And the reason is, we go through the marketplace and all of a sudden it's, rates drop and everyone's got more business they can shake a stick at. And then they think, I don't need to do any of this because I have more loans than I can handle. Well, the truth is that changes. I've been in this industry for 22 years. What I can tell you is, for 3 or 4 years, it's a party. And for a year, it's a hangover, right? It's just, that's just the way it goes. And you have to know. That. Now, what I can tell you is some of those down years when I was a lender were my best years because I was hyper efficient and I could move fast and change with my mortgage company and I could do things at scale efficiently, right? So our CRM lead management platform is going to help you really run the engine. And then engagement, you want to be able to email them, text them, send them something in Facebook, Google AdWords, whatever it is, our platform automates all that. We also supply content. So when you're messaging them, you have something of relevancy to message them. You have important information that they'll find relevant, that they'll want to reply back to you. And it's personalized to their journey. Where are they at? Because that's important. If you send people emails and say, hey, I'm Josh from ABC Lender, and we're great at purchases and refinances. I can help you with your FHA or VA loan or jumbo loan. Call me for the best rates. That's not personalized. You need to be very specific to who they are. And that's not just today, but it's kind of moving forward as the market continues. And also you want to get all 11 transactions from those customers.
Beautiful. And so look, now we're going to dive in, right? Now Corey's really going to talk about some things. How does this stuff work? Corey, how's your drink doing?
It's doing all right right now. Not as good as yours, but
okay. Yeah. Right. My ice melted completely, so I'm out of ice.
So
we teased this out, but let's dive into this now. Like, what do you do? How are you turning consumer direct and taking those practices into retail? And, how is it working for you? So first question, right? How are you winning in this retail environment? Now that it's changed, what are you guys doing and winning?
Yeah. So I made the rookie mistake earlier, I should add, of I was looking at the wrong deck. I was controlling, I think, the deck I had versus looking at yours. So apologies for kind of muddling my way through that. There is something I wanted to circle back on, though.
Sure.
One thought that I wanted to share, and this kind of ties into what you just asked, Alex. And it's a thought I had the other day, which is the hardest thing with both direct to consumer and retail is not moving at the speed of digital. We talk about that a lot, like moving, and that was actually part of one of our core taglines, moving at the speed of digital, until I realized, you know what? The hardest part is not moving at the speed of digital, it's moving at the speed of culture. And one of the questions I actually saw that will tie into the question you just asked, yep. Vernon, I saw earlier where you asked with older past clients, they do not like the, these new systems or don't like the ability, et cetera, right? And I think that this kind of ties into it, where you have this interesting juxtaposition between maybe an older clientele who wants to do things the way they've always done it. And then you have more of a millennial generation that is digital first on everything. And so what I mean when I say the hardest part is not digital, but are not moving at the speed of digital, but moving at the speed of culture is, you need not look any further back than the past, 5 or so years, maybe a little bit longer than that, but how technology and culture are constantly evolving one another in the way that we communicate. Where before it was, I'm picking up my phone at home, to I'm picking up my cell phone, to I'm sending a text message that's probably closer to an email, to now I'm just like sending an emoji, right? And so I think the key to all of these things right here is really understanding the cultural piece of it. And that's one of the areas that I think direct to consumer does exceptionally well, for the simple fact, like I mentioned before, that they're not stuck in their ways. As somebody who's leading a marketing team, I'm constantly looking at how can we evolve? How can we change? What are the trends that are coming up? How can I engage maybe an older audience base through email or everyday door direct mailers or things like that, versus through digital, through text message, through using emojis, through voiceless ring mail, all of these different tools. And so one of the best analogy that I can think of, Alex, to kind of describe how we use Sales Boomerang, and I would say Insellerate as well, it's this, is if you think about the final destination as being your customer, right? And being able to provide the support, the help, the guidance, all of those things. I love that you said mortgage advisor earlier. Like in my mind, I'm trying to steer away more and more from saying loan officer and saying a guide or a mortgage advisor, because that is really what should be happening. You should no longer be using the term. To me, loan officer is an antiquated term.
Loan consultant is
loan
what.
Consultant. That was something that years ago I learned in IndyMac Bank, and that was kind of. You're absolutely right, Court. Stuck with me for years. It's consultant. You're not the officer. You want to give everyone a loan. I mean, exactly. I'll give you a 0% loan. I'll approve everyone if I can. Give you a 100-year term. You're not the person saying no. You're trying to say yes for them. You're helping them.
Exactly. And not only that, but I think that the mindset needs to change, where a lot of times, you mentioned this earlier, Josh, where, everybody's so busy with refinance right now. I mean, they're inundated with it. And so the ability to follow up and communicate with everybody becomes a lot more difficult. And so going back to the analogy that I was saying a minute ago, Alex, is like, if we're looking at, in the terms of a journey, that's kind of part of our tagline is here to guide you home. We think about the process as being a journey that extends well beyond just the final signing and closing of a loan. If you are a true guide, then your goal should be able to provide value the entire life of that loan. Your job should be, instead of focusing in on how much money can I make, it's how much can I serve? How much can I help? And a byproduct of that is the monetary aspect, right? But if we're circling back to the analogy, the way I look at both Sales Boomerang and Insellerate is like this. The final destination is the client. We're trying to get there to provide as much support, help, and guidance as possible. Insellerate is the car. It's the means of getting from point A to point B. Now, I can point myself, if I know that I'm going to California and you give me a general direction, I can say, all right, well, I'm going west. So hopefully I make it there. One of the great things, though, of having Sales Boomerang, I don't know about you guys, but for me, I use Waze app anytime I'm going somewhere that I don't know how to get there. And I think that I liken Sales Boomerang to the Waze app, in the sense that it alerts you when you need to on-ramp and off-ramp. And what I see oftentimes, regardless of the campaign or journey that we're talking about creating, whether it's text, email, voiceless ring mail, or an individual loan officer sending a one-off broadcast with a bomb video embedded into it, whatever the situation is, it's, we talk a lot about data and all of these things right now. Those are kind of buzzwords, right? But what does that actually mean? Data is useless in and of itself. Data needs to be turned into information that is then turned into a compelling story that you can then kind of follow along and share with others, right? And I think that's one of the great things that you two, both Sales Boomerang and Insellerate, are such a great partnership, because Sales Boomerang alerts you to when, hazards are coming up, whether you're talking about an EPO alert or you're talking about an opportunity to take a shortcut, not in a negative way, but hey, you know what? If it's going to take me an hour to get from point A to point B, or 30 minutes, getting there in 30 minutes is way better than expending the energy and the resources and the time. It's like I'm saving gas and I'm saving time. And from a gas standpoint, that's your people, that's your resources, that's your time and energy and all those things. And so for me, the way that we use it is really kind of along those same lines. It's like we look at Insellerate as the vehicle to get us there. And we look at Sales Boomerang from that alert standpoint to let us know, when do we need to on ramp, when do we need to off ramp. And from an intelligence standpoint and an automation standpoint, we're able to leverage both those two things in conjunction with one another, such that if we have a customer retention campaign that's going right, and we get an alert from Sales Boomerang, and it's letting us know, hey, this person is in a great place to get a refi, or they have equity in their home. Well, great. Now we can off ramp from that more generic campaign that we have, and now we can on ramp them to a more specific one to help them take action. And so those are a few of the key ways that we're really using both Insellerate and Sales Boomerang in tandem with one another, so that we know not only what those alerts are coming through, but it's really informing us to the action that we need to take. And it informs the loan officer, particularly if they're sending out, a one-off broadcast with like an email message, right, that has a video in it. They're able to say, hey, Alex, I see, I promised you at the very beginning, and I stole this from you, Alex, but I promised you at the very beginning that I was going to help guide you along the way, even well beyond, the final signing of your loan, right? And as part of my promise to you, I just noticed that you're in a great spot right now with where rates are and with where your rate is, that you could do with a refinance. By doing that, you're able to save X, Y, and Z, right? And so by taking that kind of approach, you're also able to leverage Insellerate and Sales Boomerang with other platforms like Mortgage Coach and a few others, right? And
Absolutely.
so it's really focusing on our side, it's really focusing in on how can we be as thoughtful in our approach to create intelligent systems that, as a byproduct, generate revenue, but more importantly, provide value to the customers, which at the end of the day is what we should be promising in the first place. And I think that if we are constantly over delivering, and if we are, the borrowers are getting emails, or they're getting text messages or calls, or whatever the case may be in terms of communication, where it's always good news, you don't think that anytime I see something coming from you, Alex, or you, Josh, I'm like, oh man, every time I get something from them, I know it's great. I'm going to open this thing up. So it's really just deepening that relationship. So not only are you talking about customer retention, but you're also talking about customer advocacy too. So now when they're referring their partners, I can't tell you how many people have followed up because they've gotten a Sales Boomerang alert, and they're like, hey, I just was able to win this awesome deal, and I paired it with these other tools and services that we're doing, where we provided training and support on, and they were able to close the deal, and they were able to beat out our competitors. And why is that? That's because of the thoughtful approach that we took. And again, it's that whole, I think everything just circles back to the mindset aspect of it. And to me, when you're talking about the retail side, I think that's where training comes into play. And one of the other things that we do that's kind of a pro tip is, when we're rolling these things out, I always like to identify a subset of beta user groups that I think would be, whether it's for social or email campaign or video, whatever it is, that I already see they're trying to do those things. So if I can help them along and get them success, the other part of that is I'm able to show the other loan officers, hey, look how much I was able to help them increase their growth, their revenue, and build their relationships with the individuals that they're serving. And when you see that, it's kind of like, do you want to leave money on the table? Do you want to let your relationships fall by the wayside? If the answer is no, then do this thing over here, and we're going to give you a clear path to success through training and support. But if for whatever reason you don't want to do that, then that's fine. But at the end of the day, those mortgage advisors will be the ones that get left behind. So
well, that's
my spiel.
So listen, Corey, this is great. This actually circles back perfectly to the question we asked earlier. And everyone that's on, I agree with you, Corey. Time for a little sip. So we asked a question. We said we're going to come back to it. And you just mentioned these amazing things. See, so if you guys weren't taking notes, and yes, you're all waiting for the recording, don't wait for the recording. That's too late. Like there's things that Corey just shared with you now that you should be emailing your team about after we get off the call. The benefit and advantage that retail has, and Josh, I'd love to hear your thoughts on this too. The benefits that retail has over consumer direct, and why, if they incorporate consumer direct thinking with the advantage they have, they're going to have greater results. What is that advantage? Here's the advantage. Retail already thinks about the human side of things. Retail already wants to connect and be friendly and be there and build relationships. That is ingrained in retail because that's retail. You're forward facing. You are the storefront. So imagine taking all of your personality and matching that or equipping that or weaponizing these digital resources. I mean, Josh, like isn't that even a greater power than the consumer direct has a tough time building relationships, right?
Yeah, consumer direct does. I think one of the things that retail has is, I'm just going to say, has a massive advantage on digital reach. So you have a much loyal customer base, right? So people that are past customers have a better relationship from you because they typically came to you through a relationship. So they came in with trust, and you did a good job for them. You gave them more trust. Your ability to monitor, manage, market to, keep past customers engaged, and not just past customers. You may get a referral and someone says they want to buy a house and they don't ever buy the house from you. Doesn't mean you shouldn't keep in front of them.
Right.
So that digital reach you have, I mean, your retail loan officers actually talk to a lot of consumers, and they actually have real relationships with people, or they get referrals. So there's a massive advantage there with having that kind of digital reach. And I think retail lenders can really take advantage of that right now. These massive databases that they have that they can start immediately putting something to action on.
And one more advantage is that on the retail side, you all have relationships with referral partners that consumer direct typically doesn't have. So you may have local realtors that you're working with and attorneys, insurance, and you can take their databases as well and work with it and turn it into gold for all the people involved, right? And so, when you look at this question, I want to make sure that we answer this for them. I think you did, but I want to just kind of put it in a clear, in a box and clearly label this. Moving to, and Josh has a really cool thing about digital mortgage, by the way. I think it might be a good spiel to share towards the end of this thing, because Josh is like, it's just mortgage now. But when you talk about fully digital, you heard Corey say social survey and mortgage coach and some other things. Everything that Atlantic Coast is doing is digital, not because it's something that's cool. It just is. That's where we are. That's why Josh says, forget calling it digital mortgage. It's just mortgage now. Like that should be it. Like take out the word digital. This is how you do mortgages now. And so just to wrap this up and move on to the next question, you are totally fully going digital. Like everything you can digitize, you guys are digitizing, correct, Corey?
Yeah, we are. And I think that there's a misnomer there where it's like, oh, if you're digitizing everything, then you're trying to remove the personal element of it. And it's like, no, the way that we approach and look at digital is digital and automation, all those things there are meant to streamline the processes, not remove the personal touch. But at the same time, the same way with Sales Boomerang alerts us, hey, this new life event has occurred. This would be a great opportunity for you to provide value to them. It's the same thing with this, where it's, let's abstract everything away that isn't necessarily as important in terms of the personal relationship aspect, right? And then make sure that we're embedding them at the right moment, through the right channel, at the right time, to communicate with them one-on-one. Like me as an individual, I don't need to have you pick up your phone and call me, about a deal or something like that every step of the way. I just need for you to send me a notification, whether it's through email, text, whatever it is, right? And letting me know, hey, you've hit a new milestone in your loan process, right?
Yes.
But there are key moments throughout that time, whether it's at the beginning or closer to the end, where you are able to insert yourself. And again, it goes back to my whole notion of, we should be focusing on creating scale, not growth. And I think that that's where people kind of get off track, is because they're in their mind, they're like, well, if I'm not connecting with people, if I'm not the one doing this, then it's not working. And that simply isn't the case anymore. Yep. And I don't think that, the direction that we're going, and yes, there are maybe an older audience that doesn't like some of those things. But the good news is with Insellerate is you're able to create you're able to create sort of segmented custom audiences that you can tie into that, right? So it's like, hey, if I want to create different groups that are for more millennial or whatever it is, I can do that and market to them in a way that's going to make the most sense, whether that's through text or a ringless voicemail or whatever it is, versus this other group over here. And so I think for me, the biggest thing that I could say with all this is looking at it from a perspective of what is the most thoughtful approach that I can take. What I see a lot of times is, well, this other person is doing this kind of automation, and automation is great, so we're going to automate everything. It's like, no, like, let's think about this entire journey, this entire experience. Nowadays, the thing that separates, I think, commodity from anything else is the experience that you deliver. So if you don't want to be considered a commodity, then deliver an exceptional experience. And you can deliver an exceptional experience that's hyper personalized, that's customized and all those things by leveraging automation, but in an intelligent and in a thoughtful way. And so that's what we're doing on our end. To answer your question more directly, Alex, yes, we are moving everything over to being fully digital. So that is the direction. We're actually in the process right now of a couple big projects where the end goal is to have everything moved over to that. So to answer your question.
Yeah. Listen, I thought we've done such a great job, guys, that we have plenty of time for conversation. And I wanted to, let them see our faces and not the screen. Did you have something, Michelle? I see somebody.
I'm sorry. I'm just hopping in to usher us into the Q&A time.
Oh, go for it. You do it.
All right. Well, just a reminder to our audience really fast, if you do have any questions, that Q&A portion is still open. There's a button at the bottom of your screen that you can click to submit any questions. But to get us kicked off, a question from the audience: how hard was it to implement sales boomerang alerts within Insellerate and automate the outreach?
So, I mean, the great thing with both Josh and Alex is both of their systems have open APIs, which are things we've struggled with, with other partners before. And so the fact that they have open APIs, and the other side of that too is the level of support, right? So the fact they have an open API, they can easily connect, and they have incredible support teams that are going to be there with you every step of the way. I would say that being able to integrate those two have been one of the easiest integrations that we made. And over the past 2 years, I mean, I don't know how many systems that we've worked on integrating or new platforms that we've started working with, some that I mentioned before, in both Sales Boomerang and Insellerate in particular, being able to integrate those together have been an incredibly easy process. So shout out to Josh and Alex for setting things up with the APIs and the support teams that you guys have. Definitely appreciate it.
Yeah, it's definitely a team effort on both sides. So absolutely.
Awesome. I love this question. What do you think the loan officer role will look like in 10 plus years?
Whoa.
I'll take a stab at it. I'll start with that. So a couple of things to think about. First, Corey, you'd said it. Customers still want to talk to people. It's not about removing a loan officer.
Right.
So that won't change. What's going to happen is, you think about it, the largest financial transaction that the average American consumer will ever do is a mortgage. Right. So that's a big piece. Most people will go pay to get their taxes done by H&R Block and TurboTax and pay money to do that because they want to have someone else just give them some reassurance. So this human element's going to be a huge part of it. I think what will change though is the scale at what it's done, how it's done. So right now, I've trained loan officers for years in different mortgage companies that I owned. And one of the biggest things our company would spend time on is training loan officers how to do product pricing and eligibility. Hey, you talk to a customer, here's how you take the application, here's how you get pricing, here's how you tell them what they qualify for. Oh, here's the guidelines over here you need to look at just in case it's a PUD, or if it's a condo, we have some other guidelines over in this system, look over here. And then here's how you send disclosures. That's going to be done. In 3 to 5 years from now, it's not going to happen anymore. So what will happen is the scale, each loan officer can do many more loans than they can do right now, because the actual workload is going to change. So they'll still be talking to people. They're still going to be answering questions, but there's going to be a much larger scale at how many loans each person's able to do. That's really right. I see the market moving. I think we're going to see it in 5 years from now.
Yeah, personally, and not having the experience that you have, Josh, and not having the experience that you have, Corey, in mortgage specific, I think if I had to predict that in 10 years, it's just going to be a much better experience for the consumer. That's what we're all working on. Everyone that's in the audience, everyone that's on the panel, we're all working on just improving the experience. And so in 10 years, we're pretty sure it's going to be much better. I can't give you a prediction of what it's going to look like, but I know for certain that people are going to enjoy the experience much more than they're enjoying now or they have in the past, because I'm seeing it now. I'm seeing some of our team members saying they just got a mortgage and they had a really great experience. It was all digital. It was simple. They were getting text messages at every milestone. And, you know, it was quick and easy and they didn't have to go and meet somewhere. And so like, it's already happening. Like it's, the experience is just going to get better and better. And I think I totally agree with you there, Josh. It's going to get better, not just because of the tech, but because you're going to have only the best of the best still here serving the people because they want to serve people. It just so happens that they're in the mortgage industry.
Yep. Yeah. I mean, I kind of have two thoughts around that. One is, if you think back, 15 years ago, something like that, versus now, where back then you were sending emails for every single milestone update, right? Now you don't do that. Now an automatic email, text, like app notification goes out instantly, right? You don't have to do that. So they're able to refocus their time and energy into creating more personalized experiences when and where it makes sense for them to connect and engage on a one-on-one level. The other part that I was just thinking about that I think is going to be interesting to see is, particularly as social media continues to, expand and grow, is a lot of times people will buy products simply because of the influencer that they like promoting those products. And in a lot of ways, I almost wonder if in some regard, things will go in that direction where it's, people will become more of personalities, right? It will require the loan officer or mortgage advisor, as we say, to become more of a personality, to put themselves out there more, to be able to see, because at the end of the day, it's like, I have this choice of picking between Josh and Alex. I see Alex all the time on social media. He seems like a great person. And at the end of the day, like people want to work with like people. So if I see him and I'm not seeing Josh, then to me, it's one of those things where I'm like, you know what? I want to work with Alex. He seems like a great person, even if I'm not interfacing with Alex all the time. So I can see things going kind of in that direction, along the same lines as what Alex, you and Josh talked about as far as streamlining things. But I'm also interested to see how much of an impact social media and other client-facing platforms like that are going to influence how people change and adapt in terms of becoming more personalities and starting to put themselves out there. And we're already seeing that, right?
Yes.
So
Yeah. That's a very good, that's a very good angle. That's interesting.
We like what we're familiar with.
Yes.
So
Yeah.
that is, it's familiarity breeds, satisfaction. But that's something that, has shown, especially in marketing.
Yes.
You can market. I've seen lenders take small sections of an area, maybe a county, and market as big as the big lenders in those areas. And those people in those county, they don't know that they're not the biggest lender in the country, just like everyone else is, just because
Right.
everyone's seeing them, and they're seeing them at the same frequency. They're seeing the other lenders, and to everyone in that county, they're massive.
yeah.
Just by being out there.
Great.
And you
point.
feel like you actually know the person too. I don't know if you guys have ever experienced this, but there's certain people that I follow on Instagram is probably the biggest social platform that I'm engaged with. But there's certain people that I follow and I see all the time. And it's almost gotten to a point where you feel like you know them, even though you've never met them.
Yes.
And I think that the loan officers that take that approach and that are adapting to this sort of, again, going back to the whole cultural aspect that I mentioned earlier, it's, we're not moving at the speed of digital, we're moving at the speed of culture, and that is way faster than digital. And so I think that those that adapt that, which is one of the reasons we're constantly providing training and support and pushing our mortgage advisors to step out on the social and those other platforms, because I think, to me, that's one of the biggest areas of change that we're going to see coming in the next, 10 years is a ways away. And considering how exponentially technology increases year by year, who knows what's going to be happening in 10 years? We could just be telepathically.
Hey. So listen, I'm actually getting some telepathic messages coming in here that we have a lot more questions. Let's jump to them, Melissa.
Yes, so we've had some really good conversations happening in the chat with just that traditional versus digital approach. So what is the breakdown between technology-friendly borrowers versus those that would rather do everything by phone or direct mail or anything like that? And then do you have strategies that are flexible for both?
Ooh.
Yeah, so one of the things that I'm pushing for my team, for my marketing team, and part of the training and support that we're really pushing is really the integration of video. And I know this kind of touches on the social media part, but outside of that, whether you're talking about emails or through text, there's something interesting psychologically that happens with video. and this goes back to the whole grow versus scale thing, is that when you're watching somebody on video, there's no discernment in your brain, psychologically speaking, where your brain is saying, oh, this is on video. In your brain's mind, your brain thinks that they're talking to that person or seeing that person in real life. And so that's one of the things where I think being able to find a balance between integrating video and other things like that, where you can kind of provide sort of a hybrid experience, not only for an older generation, but it's also good for millennials and anybody that's in between that. But the other thing too is, I think it also boils down to the mortgage advisor kind of taking the lead on those things and really putting onus on them, where, it's like, there's only but so much that you can do. Automation technology is not the end all be all. It's not the solution or the answer to everything. And I tell all the people on our production sales teams that exact thing is like, there are certain things that we can do. There are certain things that we can't do. And those things that we can't do, to your point, when it comes to people that prefer not to get emails or text messages or any of those things, is it requires the loan officer to take the initiative, take ownership, pick up the phone and follow up. Or if they're not capable of doing that, being honest and forthright with that individual and saying, hey, this isn't really how I do business. And then I think that provides an opportunity and a learning moment where you can actually come alongside that person. It may require a little bit more time, but you can kind of show them the process and why it makes sense for you to do your things the way that you are, why you've developed the system that you have, because it is more efficient. And that doesn't mean, that you're removing yourself from the process, or that you're trying to just digitize or automate everything because you're not trying to talk to anybody. But I think that's where that whole training and having a conversation really comes into play. Alex, Josh, what do you guys think about that?
Josh, you got an opinion?
No, I think a great point, Corey. You have to find out from the consumer how they want to respond, right, and how you want to interact with them. I think what we have seen, though, I don't know how many consumers out there don't do things by email or text message right now. I mean, you're talking 90+% of the consumers are now adapting to that mode. That doesn't mean that direct mail isn't still a great mode to connect with consumers, because it still is. Absolutely. It just means people are adapting to change so much faster now. I think that's, time will only pick that up. Give, in the 4 or 5 years, it's going to be, everyone's going to want to be interacting in a digital space because it just makes it easier, right? It's an easier transaction.
I think you nailed it, Josh. I think it's listening and understanding that if there is a customer that wants a more personalized, hands-on phone call, in-person meetings, then that's the beauty of this entire presentation. That's what retail is for, right? Nobody's going to shy away from that. It's just not having a digital presence, not having digital resources, not having automation, not having that support that will make a negative impact, right? Like offering both is going to have a positive impact. So don't stop doing those things and listen, right? I think, Josh, you nailed it. It's just like, you got to listen. If they say they want to meet in person, then okay. If you have that ability, yes. If you don't, okay, you're probably going to lose that deal. They want to meet in person. You don't have somebody in person. Okay. That's as a matter of fact, if you don't have somebody in person, you should be as good a person as possible by saying, hey, we don't do that, but you know what? We know a great company in your area that does do that. Let us make the intro. You don't have to look and guess. We will personally walk you in there and give a referral to somebody, right? Like be that kind of company. And I think, that's just basically what you're saying, Josh. Listen and give them what they need and don't force them. So what else do we have, Melissa? Any other good questions?
So this one is a two-part question, so buckle up.
Okay, here we go. I'll have a sip.
Do you think that regulators and the definition of origination will have to evolve with this as negotiations take place in more automated ways? Part two, do you think that this technology is evolving faster than oversight for this, and is that a hurdle for tech adoption?
Okay, hold on. Before anybody answers this question, my goodness. This is a topic. Like, this isn't a question. This is let's have an entire session on this. I think that's a great question. I just don't know if we have 5 minutes to answer that. Can we get who asked that question? Because we want to get, you have it, Josh?
Well, no, I didn't ask the question, but it was actually a part of the notes I had for this topic was the fact that regulation and how that.
Oh, cool. All right.
Area.
Jump in there.
I just in a quick thought is, what has hindered us for a while to be more digital approach to buying mortgages? I mean, you have to sign documents 4 or 5 times, send things over. That's kind of archaic with every other transaction that you do. No other transaction requires that. Has been the technology, but it's also the regulation. So I think the regulation that does need to change to speed this process up is more on the back end, ensuring lenders that Fannie Mae, Freddie Mac will buy these loans, that digital mortgages are acceptable, right? They've already allowed for asset verification. They've already allowed for the work number. So they have some things that are allowing for this. As that continues to, get better, I think that's the area that needs to change, is actually the servicing side of it, making rules that allow for this technology to be used. The consumer side of it, and this isn't hindering, this isn't speeding up any kind of issue for consumers. They're still getting a mortgage, still getting disclosed. Everything's still exactly the same way. They're actually probably getting a better loan because it's cheaper, because lenders are going to be more efficient.
Yeah. Wow. You actually answered that in less than a minute. That's amazing. That's a big question. Corey, you want to jump in on that, or let's jump to the next question? What do you think?
Yeah, I think let's just jump to the next question. I don't think I'm going to be able to add anything that Josh did.
No, that was brilliant. He nailed that. What else do we have?
Well, this is probably going to be our last one, but how does the realtor relationship fit into the digital mortgage equation?
Oh my goodness, Corey. There you go.
So the way I look at it is almost kind of flipping the script, where it's always kind of been the loan officer beholden to the real estate agent, right? Because the real estate agent is the one that's typically interfacing with the borrower first, and then they're kind of passing them on to whoever their preferred lender is. And so one of our goals is to show so much value through the collateral that we create, through the tools that we provide, and being able to highlight the competitive advantages, not just in that single loan, but also throughout the life of that loan, whether it comes to buying a second home or an investment property or referrals and all those things. And so that's really what our goal is right now, is to be able to provide enough value that kind of flips that script, so that instead of it being sort of a one-way relationship, it's more of a bi-directional relationship, where it's not the realtor that's holding, sort of the power, so to speak, over the loan officer, but it's really the loan officer saying, hey, look at all this value that I bring to you. Every time we work together, I'm offering you X, Y, and Z, whether it's co-marketing materials or being able to co-market the communications that are going out on a loan, whether it's through milestone status updates or whatever the case is, right? Or the follow-up. And so that's really been our goal, is to figure out what is the value that we can add from the realtor perspective that's going to kind of shift that power differential over to, not necessarily over to the loan officer, but just kind of make it where it's more balanced. And so that's really the best response that I can give to that, is just looking for those opportunities to provide value to the realtor and making sure that we're clearly stating those. And then once they see what the value is, they're like, yeah, this is a no-brainer. Like, I want to work with you every time, particularly when they know the efficiency of our systems and how we follow up and the experience that we provide. Like, that's the other piece too, is your direct reflection on the realtor as a loan officer, right? And so if you're giving a crappy experience to somebody, they're not going to work with you, versus, Alex or Josh over here, who are exceptional. They have an efficient process. They're automating what they need to, but they're also engaging on a personal level when and where it makes the most sense. They're keeping you as a realtor informed, along with, your settlement agent and whoever else needs to be included. And I think once individuals see that on the realtor side, it's kind of a no-brainer. And so that's really the approach that we're taking.
Let me ask you this, Corey. And this comes up a lot with organizations, lenders that work with Sales Boomerang. This is something that we preach, and I know you've heard this from us before too. But how important and how relevant does your name become to a realtor when you're referring business back to them? They send you a deal, and all of a sudden that deal didn't qualify, but you're calling them back 6 months later saying you just got a notification that they are qualified. How much more value and how much more volume are you adding to them? And what happens to that relationship then?
100%. It the way I kind of look at Sales Boomerang is it provides you all the hidden opportunities you never know existed. And so in the same way that you're talking about right now, Alex, that value kind of trickles down, so to speak, to the realtor too, to where it's like, if you've referred somebody to me and say their credit isn't where it needs to be, so it's not going to make sense to do it right now, or we can't do it right now. But I come back to you 6 months later, I'm like, hey, Alex, I got great news. I've already reached out to whoever the person is. They're in good shape right now with their credit. I've been following up on them. We had a credit improvement strategy in place. We're at a good spot right now. You as a realtor, like, wow, you put in a credit strategy improvement plan in process. That's awesome. They're now ready and you're notifying me without me having to do anything. Like, that's amazing. It's basically doing all the heavy lifting for them. And again, in the same way that it's providing those hidden, unexpected deals that you would have never otherwise known existed for us as a lender, it's also doing the exact same thing for your referral partner. And I don't know a single person that doesn't want to have a free transaction handed to them, whether it's the loan or it's the referral partner from the purchasing side of things. So you're 100% right when it comes to that. I mean, the value is overwhelming when it comes to that.
Let me tie a nice little bow around this. So what Corey's saying, and then Melissa, I'm done with this, right? 30 seconds top. She's over there like, I'm going to choke you. So look, tie a bow around it. You have all of this digital, and we're talking about retail thinking, consumer direct, but now we're talking about in general experience for your entire business. So you're talking about tying in your realtor into your strategy and you into your realtor strategy. And all of a sudden you have a notification that gets delivered automatically through Josh's system to everyone that needs to see it, including the realtor potentially. And now you have an alliance, and a realtor now becomes more of a loyal fan because every month you're delivering 5, 10, 15, 20 opportunities to the realtor, and the realtor doesn't even deliver that to you a year. Yep. And you're doing it automatically with these tools. So Corey, thank you for your time. Josh, thanks for setting us up and inviting us to speak with you. Melissa, I owe you a drink for letting me talk for 1 extra minute.
You're good. Thanks everyone. Thanks to our panelists and our attendees. Just as a quick reminder, we will be sending the webinar recording to all of our registrants within 24 hours. And this webinar will also be available online at housingwire.com. Thank you for joining us and have a great day.
Cheers.